Hello investors, welcome back to the channel. For today's video, I'm going to be going ahead and give you my thesis on why I decided to go ahead and add these stocks into my portfolio. For those of you who are new here, my name is Tim, and on this channel, I'm going to try to give you as much information as I possibly can in order to help you push your investments to the next level. Now, if you are new here, we went ahead and we started off this portfolio with $65 because my intention is to show you how to grow a small account portfolio and make that portfolio big over time by investing in quality stocks and taking a few mitigated risk. Now, the first stock I'm going to go ahead and review today, why I went ahead and added into my portfolio, that's going to be Meta. Now, I really like Meta, and for a long time, Meta was not a stock I wanted to own. As you guys can see, I didn't open a position in Meta in which I started to dollar cost average, and thus far I have probably like about just almost $30 in Meta. Now, I do intend to maintain Meta for the long run. At the end of my thesis, I'm going to tell you my exit strategy when I'm going to decide to get out of Meta. Now, for a long time, Meta has not been a stock I actually wanted to own, but I did not rush into it. I didn't buy it because it was trending, and I definitely did not buy it because of the hype. In fact, for years, Meta was a company I actively avoided because of the whole Facebook hype thing. Eventually, after looking at the business, the numbers, the competitive position, and the way the market was pricing the stock, I came to a different conclusion. And I came to that conclusion when Meta dropped to the current price it's trading at right now, which is 646.75. And to be frank, that's what this video is about. I want to walk you through why I decided to invest in Meta, what's changed in my thinking, and how I evaluate a company like this for a long-term investor perspective. So like I showed you guys, some of the stocks in my portfolio is going to be for a long-term thesis, some is going to be for growth, value, some is going to be for dividends, and two are going to be speculative. Now, this is not financial advice. This isn't a prediction video. It's simply my reasoning so you can decide whether this type of investing makes sense for you. Now, Meta is one of those stocks where public opinion and business reality are often completely disconnected. When people talk about Meta, the conversation usually sounds like this: Facebook is dying, Instagram is saturated, TikTok is winning, the metaverse is a waste of money, regulation is gonna crush Meta. And on the surface, these concerns are absolutely valid. But one of the biggest mistakes investors make is confusing narratives with numbers. Stocks don't just move up long term because of headlines, they move up because of cash flow, because of competitive advantages, because of user behavior, and most importantly, because of execution over time. So instead of asking, do people like Meta? I ask myself a different question. Does Meta still have a strong business underneath all of this noise? So the first major shift in my thinking happened when I stopped thinking about Meta as Facebook. Meta doesn't operate a single app. They operate an ecosystem of attention. They control apps like Facebook, Instagram, WhatsApp, Messenger, Threads, and one of the most advanced ads platform in the world. Even if you personally do not use Facebook, chances are you have scrolled through Instagram, you have watched reels, you have messaged someone on WhatsApp, especially when you're traveling, or you have interacted with Meta Power ads. Meta's real asset isn't a platform, it's time. And wherever attention goes, advertising dollars always follow. As long as Meta controls a massive share of screen time, then they're going to remain extremely relevant, regardless of which app is cool at the moment. And at this moment, I believe the cool one is going to be TikTok. Another reason I decided to invest in Meta is the efficiency of the business model. Meta doesn't manufacture physical products. I love investing in companies where they don't have physical products. I love platforms. That's just my favorites. Meta doesn't manage global supply chains, or Meta doesn't deal with inventory risk. Instead, they monetize user behavior at scale. What that does is that creates high margins, massive free cash flow, and a business that can adapt very quickly. And that matters because companies that generate consistent cash flow can invest in growth. They can buy back shares. They can absorb the economic downturns, and they can outlast competitors. This isn't a fragile company barely holding on. It's a dominant business that went through the period of declining confidence. When Meta stock sold off hard, a lot of investors panicked, but that's when I decided to buy. But price declines alone don't tell you much. The better question is, what actually changed about the business? Users did not disappear. Advertising did not stop existing. Meta did not lose its platforms. And yes, the growth slowed down. And also, yes, spending was aggressive. Even at the point of making this video, Uncle Zuck just went ahead and spent $600 billion in his AI. And that is billions with a B, not millions. And yes, after all of this, the expectations had to reset. But that happens to nearly every large tech company at some point in time. Amazon went through it, Apple went through it, and Netflix is going through it right now. The opportunity often shows up when expectations collapse faster than the fundamentals. That's what caught my attention with Meta. It is very important to clarify. I did not invest in Meta because I'm betting everything on the metaverse. The metaverse, in my view, is an optional upside, not based on my core thesis. Meta doesn't need the metaverse to succeed in order to justify its valuation. If the metaverse works long term, then that's freaking awesome. If it doesn't, the core advertising business still stands on its own. That's what makes this risk asymmetric, and I love asymmetric investing. I am not paying a premium price for a speculative idea. I'm buying a profitable business that also happens to be investing in future technology. One of the biggest reasons I became more confident in Meta is their investment in AI. Like I mentioned, Uncle Zuck is spending $600 billion at the time of making this video in order to upgrade their AI infrastructure. Meta isn't using AI as a buzzword like most companies are. AI directly improves Meta's ad targeting, their content recommendations, their engagement, and the amount of time that users spend on the platform. And all this leads to better results for advertisers, higher revenue for users, and stronger long term margins for investors like me. Meta doesn't need millions of new subscribers to grow. All they need to do is monetize the existing user base more effectively. And AI does that exactly and efficiently. This is the kind of advantage that compounds quietly over time and often isn't fully reflected in short term stock prices. So I do not mind acquiring Meta at this current price. One thing though that I pay close attention to as an investor is whether management can adapt. Meta has made some changes as well. Some of the changes they made was with the cost discipline improving, means they became more efficient with their cost. And then efficiency became a priority. Spending was reined just for a bit, and the focus shifted back to profitability. No company gets everything right all the time. What matters is whether leadership responds when conditions are changing, and Meta did. And historically, when management aligns spending with shareholders' outcomes, the market eventually notices. I did not invest based on excitement. I invested based on cash flow, on market dominance, on strong balance sheets, and long term optionality. Meta fits my framework perfectly. It's not a speculative trade. It's not a short term bet. It's a company with global scale, strong economics, and multiple ways to win over time. That's why it's earned a place in my portfolio. Now, just to be fair, no investment is risk free. Meta too also faces some risk. Some of these risks may be regulatory pressure because the company is growing at such a massive scale that they might be forced to break up sooner or later. Competition, platform fatigue. People are spending so much time on the platform, they might be bored and might look to newer platforms such as TikTok. Also, it's execution risk. Execution risk is going to apply to after the AI infrastructure has been developed. How do we get the users involved in using these products that have been created or has been upgraded? But all these risks have been well known before I even got into the stock. And when risks are known, they're often already reflected in the share price. What hurts investors are unknown risk, not the ones everyone is already talking about. So I didn't invest in Meta because it was popular. I invested in Meta because it was misunderstood. Because when sentiment gets overly negative, while the business remains strong, opportunity tends to show up. Meta, like most company, is not perfect, but it is profitable. It is powerful and is positioned to remain relevant for a very long time. That is why I decided to invest in Meta. Now, my intention for giving you my thesis of why I invested in most of these companies that I have in my portfolio is that maybe you could take these ideas and come up with your own thesis before you decide to invest in any one of these stocks. So if this breakdown helped you to think differently about Meta, then go ahead, hit the like button. Remember to subscribe to the channel. If you are watching this video on a mobile, then please go ahead and hit your notification bell. Now, in the comments below, I want to know, is Meta a stock that you guys are thinking of investing in, or do you already have it in your portfolio? And lastly, I want you to always remember this. What I'm trying to do on this channel, my main intention is to give you as much information as I possibly can in order to help you push your investments to the next level.